afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 21st of August. It's a Monday and we have our regular Monday guest, Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming to us out of Singapore. Now, Vishnu, as always, great to have you on the Monday.
Always a pleasure to be here, Brian. Thanks for having me to start the week with you.
Now, Vishnu, for a start, let's take a look at how the numbers stack up across the region, and then we'll get your insights. We start with cryptocurrencies. Bitcoin is at 26,044, down 0.29%. Ethereum is at 1,675. It's up 0.49%. Looking across to regional stock markets, we start close to home where you're at. The Straits Times Index is down 0.45%. Bursa Malaysia is up 0.12%. Shanghai is down 0.24%. The ASX All Ordinaries is down 0.2%. The Nikkei is up 0.5%. The Hang Seng is down 1.02%. And rounding up the numbers, we've got the Kospi, which is up 0.34%. Vishnu, your views on market performance in the first half of the day?
So it looks like the markets are starting the week with a bit of trepidation, if not outright concerns, and that may revolve around two factors. One's the Fed, particularly, and this is the interesting thing. Heading into this week, late last week, I don't think there were major concerns about this week. There's no tier one data. What we do have that everyone will be watching in the market late week is Jackson Hole. So basically, it's an economic policy symposium. All the who's who of the central banks will be speaking there, and I think there's going to be a lot of attention being paid to not just Jerome Powell's take on the economy and policy, but also perhaps the ECB. And here's the thing: I think markets didn't make too much of this because we've been quite preoccupied with the notion that we are at peak global rates. So not much to think about. The question really came down to, splitting hairs. Another 25, another 50, no more. Whatever the case, markets were quite happy with that. But I think a closer look at the topic for the symposium is structural shifts in the global economy. And that's really boring talk, but it's actually very sexy for a central banker. And this is what we need to perhaps appreciate. When a central banker talks about structural shifts, either it's going to be a very factual recounting of what has happened, or he could be saying, back to the drawing board, we need to reassess what the new neutral rates are, where we need to be in terms of inflation targets, so on and so forth. So that's when markets woke up and they realized, hang on, we could end the week with a materially different idea about where neutral rates may end up. Rates may not come down as much as we expect them to over the next couple of years. So I think that's what's giving them second thoughts, and that's what's holding yields up somewhat. As a corollary, risk assets are not doing well. We also have another interesting situation, which is China. So China last week was about some worries, some hopes, and between the two, I think markets are now coming to be a bit more cautious in their views. So last week, two things happened. We had a step up in the drip feed of stimulus that China has been announcing. So more rate cuts, more measures being announced, so on and so forth. And they were also doing a lot more to hold up the renminbi to ensure that the Chinese currency doesn't drop by too much. Over the weekend, I think news came out that the PBOC and other financial regulators went to speak with the banks and said, look, we need to lend out more, lend at lower rates. We need to backstop the debt issues with the local governments. We'll stimulate the economy. What ought to have been reassuring, I think also came across as worrying, because there's a sense that maybe we got the worst of both worlds, which is too little too late in the initial phase. And now when we are scrambling to take steps, some of these steps may not be effective because the underlying confidence has been eroded and there's still a lack of clarity. So markets are perhaps playing it safe, particularly in the context of Jackson Hole this week. So this week is really all about maybe whether you look at China or you look at the global central banks, how we're going to dig ourselves out of a hole.
And that's the situation in China is particularly worrying because a lot of the growth forecast for the region in particular was was basically premised on a China expansion, which has obviously not happened. But Vishnu, then the stimulus continues and policy changes in China today as well. And interestingly, they cut the 1-year rate, but not the 5-year rate. So as investors, how should we read that?
I think the read on this is that China's message is that this is still nuanced. They are not actually throwing in the kitchen sink. They're not just letting go of all of the spigots. And so it also reflects. So either we can look at it positively, which is there's a certain amount of restraint, and that they probably think they have certain things under control. That can have a positive spin. But equally, it also reveals that they've got competing policy objectives. And it's a really delicate balance, because if they start slashing rates, then they come on, they're confronted by the problem of renminbi stability. Maybe the currency won't be stable, and that can set off its own financial contagion risks. So they need to really walk a tight line. And depending on whether you want to look at it as measured restraint and wisdom, or you want to look at it as a very, very narrow path to revive the economy, and maybe there's an element of truth in both of them. That's what's being revealed, and that's why I think markets are somewhat circumspect about the prospects. And you're absolutely right. That resonates well beyond the shores of China. The entire region, like you said, growth was predicated on a reopening China. What we're left with is we are not so upbeat about demand in terms of the supply chain linkages via trade, or the investment flows that could come from China, because now they need to backstop their own currency. They're not going to flood other economies with their money. So these are the two things you can be sure of. As for tourism, we are in a cautious way optimistic, because we think the deprivation factor is quite high. So people will still want to go out, they want to travel. So we're going to get a bumpy but very uneven ASEAN recovery. Hospitality will still continue to outperform, even if it's not going to be, firing away at those kind of levels that we initially thought. It's still going to be the outperforming sector. Manufacturing is the one that's going to have a very bumpy path out. The one that people will perhaps remain most nervous about are any ripple effects that will have on our asset markets here, be it credit markets, equity markets, or property markets. These are the places where adverse ripple effects from China could be a huge risk.
Now, Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure. Always good to be here, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and this has been BizTech's Midday Market Watch. I'm Brian Fernandez. Check out our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites for this interview. Thank you very much for tuning in.